broadly speaking, why do you think just overall there might be this shift in attitude towards de-dollarization globally?
Well, I mean, quite frankly, I'm never a doom and gloom type of person. I'm a very optimistic person. Quite frankly, I wouldn't be in exploration business because if you don't have optimism, you exploration's not meant for you. But I do believe that we're in a new Cold War in some regards, and that really began in the last presidential cycle, and it's carried on into this one.
We're talking about the commodities space with our next guest, Max Porterfield, who is a president and CEO of Callinex, and we'll be talking about exactly what the drivers are for base metals, gold, and silver, and the macro environment for the resource sector and what's next for investors. Max, welcome to the show. Pleasure to host you today.
Thank you for having me. I'm really excited to be here today.
Yeah, we're going to be talking about the base metals that your company Callinex is involved with, primarily copper, zinc as a byproduct, and gold and silver. Let's start with the big question on everyone's mind, China's slowdown. How is this going to impact the commodity space, in particular base metals? A lot of the demand that was going into construction in China is now forecasted to be cut out. How's that going to impact copper?
Well, certainly any kind of slowdown where you're going to reduce demand on any kind of base metals is going to have an impact on the overall market. The reality is, though, any slowdown is only going to last a matter of months, whether it be 6, 12 months. But bigger picture, forces are in play for much higher metal prices. That's going to be driven by, at the end of the day, supply-demand fundamentals. So while you do have some weakening out of Chinese demand, which would impact, of course, the copper and base metals markets overall, being that they're the largest consumer of copper in the world, I think there's a lot of government policy outside of China that's driving big demand for these metals, irrespective of that. And government policy is going to be a precursor to change. And as the world and the developed economies shift away from hydrocarbons, oil and gas, and want to replace those with battery-powered vehicles and appliances, everything, you're certainly going to need more and more base metals. And that's going to be a big demand driver moving forward for the base metals complex. Now, on the supply side of things, you also see an erosion on global supply that's going to be driven by multiple different factors. First and foremost is truly over the past 15, 20 years, it's not been, sexy, so to speak, to be an explorer for base metals. I can tell you, I've been at Callinex now almost a decade, where we're again advancing some high-grade copper discoveries here. But it wasn't always, the metal to be in and the sexy metal to be in. And when you don't have that really kind of excitement from the investor universe, it's very hard to capitalize exploration. So what you've had is really a lack of exploration. A lack of exploration dollars going into any metal is going to reduce any kind of mine supply coming online. And then if you look at kind of the geopolitical risk associated with a lot of this supply, it's hitting supply quite hard. You're seeing reduced supply coming offline in terms of production for copper out of both Chile and Peru due to social unrest. Chile and Peru collectively are the largest producers of copper in the world, of just north of 30% of global production. They're like the OPEC of copper. And so the social unrest there has impacted them. The inflationary pressures on the mines there in Chile and Peru have gone up nearly 30% in the past about 18 months, are all having an impact on supply. So it's a complex subject, but long story short, the weakness in China is only a small factor. Much bigger forces in play for the metals.
Talking about electric vehicles, what is the use case of copper in relation to electric vehicles? And we'll talk about how critical this may or may not be.
Well, people don't appreciate, oftentimes when you think of electric vehicles and you think metals, you might think lithium, but truly a big component of electric car is going to be copper. I actually have a 1966 Mustang I've had actually since I was 16 years old, and that car has got roughly 40 pounds of copper. If you look at some of these electric vehicles, particularly the SUVs that are much larger in size, you're looking at north of 150, 160 pounds of copper. So the intensity of copper consumption in an electric vehicle has dramatically shifted and is much more intensive when you look at an EV versus more of a combustion engine vehicle. And then on top of that, of course, you have all the infrastructure associated with charging these cars as they go down the road, and that's all going to consume base metals.
In 2011, when the gold price spiked up, a lot of tech companies were thrifting on the usage of gold for their chips and their phones and whatnot in the electronics components. Could something similar happen to the automotive industry, where if you have let's say a surge in lithium price or a surge in copper price, they may have to either thrift or substitute? Could that happen?
Yeah, I don't see that happening in terms of copper. Copper is used for its physical rock property, and that's its ability to conduct electricity. And so, unless there's some sort of replacement for that on the scale, I don't see any substitute coming online that's going to replace copper in a meaningful way. Because again, copper is used for a very specific reason. Gold's a great conductor, but gold's much more expensive than copper. So, again, demand erosion is a concern as prices go up. No different than if oil prices go up, incredibly high, and then it kind of really drags the consumer in the way they transport themselves. So with copper, I really don't see that. In particular with copper, though, and what I like to compare it a lot to is really the platinum markets. The platinum markets were dramatically impacted when government policy dictated that all cars needed catalytic converters. And then all of a sudden you put a new industrial demand onto a metal, and that was a very, very positive move if you're an investor in the platinum markets. And I really see copper and zinc very similar to that. You're having big demand drivers put from a new kind of industry, which is the electric vehicle, and government policies dictating that occurring by a specific period of time. And 2035 is not too far away, which is where a lot of this is headed.
The copper price, I'm looking at the futures price, has been falling steadily over the year. Year to date, it's down about 1.4%. So not a huge drop, but it's been trending lower and flat. Is this an indicator, in your opinion, of a slowdown in the global economy, given how important copper is to industrial production?
Well, I mean, I'm not going to argue that we're probably not under some sort of slowdown. I think that's probably certainly the case. But the fact that you've got a flat, more or less, copper market, as you mentioned from the price action performance that you just stated, just down 1.5%, that's actually very, very strong signal for the copper market to come. Typically, when you are going to a recessionary period, you see copper prices pull back much more significantly. But again, this is driven by supply-demand fundamentals. And if you look at above ground inventories, like the LME exchange in London, they're at 5-year lows, if not much longer period of time. So if you look at the LME inventories above ground that are stockpiled, you've got just a few days of supply. And this is in the midst of what some are calling a recessionary environment on a global basis. Certainly China being the strongest demand driver for copper in terms of from a country perspective. The reports it's slowing down dampened copper prices, but the fact that we're roughly flat, more or less, is a very, very strong signal, because again, it's supply side problem. Demand's only one side of the equation here.
What is the relationship between a tightening Federal Reserve monetary policy, and which is what we've seen in the last year and a half, and commodities, in particular base metals? Have you observed any sort of relationship there?
Well, I mean, typically, if you've got a rising interest rate environment, that's going to slow down consumption. In turn, would slow down your consumption of metals, particularly the base metals. But like I said, there's two sides to the coin. And while that you inherently would look at it that way, you're not looking at government policy on the flip side that's driving demand, as well as the supply side problem with a lack of exploration that's taken place over the past 15 years.
With the price of base metals falling, having fallen, that is, like copper, for example. I mean, I use the word fallen, but it's really just flat. But with the price of commodities like copper stabilizing and flat, do you think that may actually bring down inflationary pressures going forward, assuming the prices don't go back up?
Well, I think the inflationary pressures are driven by much more than just the copper price staying flat or oil prices staying flat. I think the inflationary pressures are in large part going to be also driven by government spending and that debt issue. And that is definitely not being taken care of. That's a long-term systemic problem across many governments. Again, I think the inflation is not going to be driven by copper prices going up. Certainly that will add to it. But the slowdown in copper, I don't think it's going to dampen inflation or a flattening in copper prices.
What is your outlook on inflation going forward? The U.S. has come down from 9.1% all the way down to just above 3% on the headline CPI. Core PCE, which is the Fed's preferred measure of inflation, is still above 4%. So that's still got some way to go. What's your outlook for what's next?
I don't think that we're out of the woods on it. To be honest, I don't want to be probably an unpopular opinion on that. But at the end of the day, I don't think the inflationary environment that they set forth can be slowed as quickly as they want it to be slowed. They have raised rates. They have raised rates rather aggressively, but they were also in a zero interest rate environment for a significant period of time. And the government policy and the debt being out of control, it has not changed. That theme has not changed. And until that theme gets changed, I don't really see the inflationary pressures, calming down. I think that the rate hikes, while it's going to be really challenging to some economies, like the Canadian economy right now, particularly the housing, and everyone's saying, "Oh, well, you've got to stop raising rates or reduce rates, or no one's going to be able to handle that." I mean, people forget 18% interest rates, because that was these high interest. People think we're in higher interest rates right now. They've forgotten what occurred in the 70s.
Sidestepping for just a minute, you and I are both based in Canada. You brought up housing. Are you surprised that the housing market here hasn't collapsed yet? Given that, look, I'm in Vancouver. People have been calling for a bubble to pop for a decade. It really hasn't. And in the past year, when mortgage rates spiked up to, I think 15 or 20-year highs, no one is really selling en masse, right? Well, what's going on here?
Not yet. I mean, everything has a tipping point. I think I'm with you on the housing prices in Vancouver are very high. You know nobody's thinking about it. And that's been driven by a lot of different factors. But the reality is I think that they're in a world of hurt. I think you're going to see a lot of inventory start coming online. And I do think that people are getting squeezed quite significantly. And you can just hear that in conversations that you can, be at a coffee shop, you can hear people over talking about these type of issues. And this is certainly not something you would have heard a few years ago. I mean, you might have heard obviously the housing market being strong, but I'm talking about the financial pressures that are being put on everybody due to the inflationary pressures of everyday life. And that is going to have an impact on Canadian housing. I am calling that Canadian housing will come down quite significantly. And the only thing to offset it's the devaluing of the Canadian dollar.
Devaluing of the Canadian dollar relative to the U.S. dollar.
Yeah, so I mean, I think the U.S. is also in a world of hurt. I think the U.S. dollar is in a big problem, probably in a bigger problem than the Canadian dollar, quite frankly. And I do think that there's a shift away from the U.S. dollar as a world reserve currency. You've had the BRICS come out, look to make their own currency. They're looking to back that currency, buy precious metals. And I think that's one of the things that people are going to be becoming more attuned to and paying more attention to is, what currency are they holding? You've had, the president of Kenya come out and say, get out of the U.S. dollar. When I traveled to Kenya a few years ago, all you spent was U.S. dollars. And so there's a big shift coming on. I think it's a once in a multi-generational shift. And that is going to be away from the U.S. dollar. And with that being said, a weaker dollar is going to lead to higher prices for commodities that are priced in that currency or the currency that you're in. And so I do believe, again, that we're in a very bullish cycle for the metal space, precious metals as well, for those reasons. And I think you're going to have increased demand for precious metals. And I think people are going to start looking. I mean, if you look at cryptocurrency at its basis is really a substitute for gold. And the only reason I think gold prices are at the level that they are, quite frankly, is a lot of that natural flow of capital that would traditionally go to the precious metals as a hedge or to get away from the dollar, kind of reduce your risk in terms of asset classes, has flown into a crypto. But again, you can look at it different ways. Is it a fair replacement? I'm pro and bullish on the metal side on precious metals. That's just inherent in my kind of investment outlook and me as a person. But certainly, weaker, fiat currency perspective, you want to be in the metals to hedge any real assets.
Well, okay. So yeah, that's a good point. I mean, you brought up BRICS. Just to clarify, the BRICS countries, some of them have talked about backing their current or creating a common currency and backing with gold, particularly Russia. They haven't done that yet. That wasn't on the agenda in the last summit, but that was, talked about by Russia in particular. Why do you think, just broadly speaking, why do you think just overall there might be this shift in attitude towards de-dollarization globally?
Well, I mean, quite frankly, I'm never a doom and gloom type of person. I'm a very optimistic person. Quite frankly, I wouldn't be in exploration business because if you don't have optimism, exploration's not meant for you. But I do believe that we're in a new Cold War in some regards, and that really began in the last presidential cycle, and it's carried on into this one. It's a different style. Started with the trade war under the Trump presidency and carried
Just to
on.
clarify, Cold War between whom?
Well, I think there's multiple going on set, but certainly between the U.S. and Chinese relations are very cold, and the U.S. and Russia, and of course the allies are all associated with that. And you're having a race to kind of pick sides. You obviously have the traditional Five Eyes here with the U.S., Canada, New Zealand, UK, Australia, and then of course the BRICS, and they're strengthening economies as well. So that kind of tightening in relations between those countries, I think is going to play out further as things progress. I think that's what's driving away also the move away from the U.S. dollar and creating another reserve currency. And quite frankly, removing, in Russia's case, since the invasion of Ukraine, everything that's going on with that is removing themselves from the international banking system and the way it's set up. And the advent of cryptocurrencies, quite frankly, is what would facilitate in blockchain technology that kind of system to be, averted and moved and used in a different way. So I think it's a very complex topic, but certainly I don't think relations among these countries is very warm. And you can tell that I think the decisions that are being made are very strategic on longer term economic decisions. I think it's more of an economic style war than the threat that of imminent war, in the more traditional sense.
If one were to create, I'm not saying it's going to happen imminently, but if one were to create another reserve currency backed by gold, why gold in particular? What property or properties does gold have that perhaps another asset doesn't, that make it ideal for such a backing?
Well, first of all, I mean, it's thousands of years. Humankind has had an affinity for gold. And that is, again, the luster that gold has, it doesn't corrode. So when they made coins out of gold, there was, a rarity to that. And so this natural properties, I think, is what probably led to the natural affinity for gold. And I think that's something that's stuck around and hasn't changed. If you look at cultures, I think culture is going to drive that too. Quite frankly, the Chinese culture has always had an affinity for gold. During the Chinese New Year, gift giving of gold is a big thing. And it's actually part of the cyclicality of gold prices is when Chinese demand comes online. And the same for India, particularly during the Indian wedding season, there's a big demand for gold. So that's inherent in these cultures. These cultures date back thousands of years. And so, again, moving forward, I think we're having a reversion to that mindset. The U.S., removed themselves off the gold standard in the 1970s or the 1970s. And I think, again, that's what led politicians in the United States to basically have a blank checkbook and endlessly get into this debt cycle that's been created ever since then. And if you're in any of these BRIC countries and you're looking at the situation and you're holding dollars as part of your reserve, why would you continue to do that? You're going to look to diversify away from the US dollar. And I think that's aggressively being done. And they don't necessarily need to create a new reserve currency in the short term. They can simply start diversifying away from the US dollar. And I think what's going to replace that will be a basket of currencies. But aside of those basket of currencies, it's certainly going to contain precious metals.
Out of personal interest as well, inflation hedging, if you were to pick, I'll give you two options here, all right? And please explain your reason. You got option A, buy gold and leave it alone for 20 years, or maybe just 15 or 10 years. Or you can buy a house in Vancouver for the same amount of money for 10 to 15 years. Which would you think would be a better inflation hedge?
I'm buying gold.
Yeah. Okay.
Gold, I think,
Um,
I will simply, and I'll expand on that. Gold's an undervalued asset class, in my opinion. And I think Vancouver real estate's an overvalued asset class. So my bet is that you buy the undervalued and then not try to ride the overvalued asset down and then back up again.
can you give us your thesis for why gold is undervalued currently, even at close to $2,000?
Well, I mean, $2,000 is more of a technical threshold for gold. I think when gold breaks through 2,000, it's going to be a key moment for gold that'll lead to a significant move. Why is gold undervalued? Gold has been undervalued for a significant period of time. And again, it needs to break through $2,000 on a technical basis. But the advent of the cryptocurrencies, I think, has taken away a lot of the tailwind that gold would naturally have. So the amount, all the the Bitcoin, all that money flowing there is inherently the demand driver or the investment thesis for Bitcoin is a diversification away from a fiat currency where a policymaker can endlessly print that. I mean, that's what makes Bitcoin such an allure, to that concept. And that concept is something that you would more traditionally have as a gold or precious metals investor. You're buying to get away from the currency that you're in as a hedge or diversification tool. And where gold historically held that place, that got replaced by again this completely new creation, which is not a metal, and it's the cryptocurrency.
One more macro question I want to come back to drill down on your company, pun intended. But you mentioned that there could be a possibility, well, we're currently in a Cold War. Is there a possibility of this escalating into a hot war? And if so, what would the catalyst be?
I mean, certainly there's a possibility to that, but I don't think that that's probably going to be the outcome. Um, U.S. policy seems to be more recently to fund other people's wars, and they've done that on a number of occasions. And I just don't think the appetite, quite frankly, by the population will be there to support government policymakers like they might have had in the past. Like going into the Iran, I mean, not the Iran, the Iraq war, for example. The time there was a lot of support, that support eroded when more facts came out. And again, I think there's a lot of fatigue by certainly the average U.S. citizen not to want to be involved in any of these things. So I think the policymakers or the politicians making the decisions to make those type of moves are going to be less caught, for lack of a better word, trigger happy to do so and enter those type of conflicts. So, if you look back, unfortunately, since Kennedy, the U.S. has been in one war or another ever since then, and that's the industrial military complex. And this is something that Dwight Eisenhower warned about in his farewell address. A number of things he warned out in the farewell address was, again, the use of policy relating around science to drive policy. He warned against that, and then of course he did war about the industrial military complex in that same speech, and the potential of what that was going to lead into. And so that had played out. It was a very ominous speech. If you could go back and read about it or listen to it, he was very right about that. And I think that people are really attuned to that, and they don't want war. They don't want to support that, and certainly policymakers are going to keep a keen eye onto that as well.
Let's turn to Callinex. We talked about all these metals because Callinex is involved in the exploration of copper with byproducts of gold, silver, and zinc. So tell us first, why Manitoba and New Brunswick? Why have you picked Canada as your primary base?
Well, I'm actually kind of like, you see me as a disruptor coming in. I'm a guy from South Texas originally, not traditionally an explorer. That's not what I, educated and went to school as a geologist per se, like a lot of my peers. And when you kind of come into that situation, you're looking at managing a high risk business, quite simply. Exploration is a high risk, high reward type of scenario. And when you're entering that type of business approach, you really want to manage risk and reduce risk where you can. I'm more than happy, and certainly our investors are more than happy to take on exploration risk. And you want to take that exploration risk where you can reduce the other risks. And one of those big risks we talked about in a lot of different ways earlier in the conversation is your geopolitical risk. We talked about the geopolitical unrest associated with a lot of the decisions being made in Chile and Peru today and the impact that's going to have on mine supply. If you look at a lot of the high grade copper, for example, comes out of the DRC, which is a very geopolitically unstable jurisdiction. But the DRC or the Congo is known for some of the richest copper in the world, right? In Manitoba, the reason why we focused in this area of the world, and Flin Flon is the name of the town that we're near, is because of the pedigree of the grade. You have high grades that you can find in very few places around the world, like the DRC, which I mentioned earlier just now, and you don't have the geopolitical risk associated with that. So you've got a rule of law. It's a tier one jurisdiction as that stands. If you want to permit something, there's a permitting regime that's been in place. The area that we're exploring and developing, there's been over 32 producing mines over the past century. And so all these are really what makes Canada a tier one jurisdiction and a place that we want to be explorers, is the ability to, when you make a discovery and you've taken that risk, you want to reduce those other hurdles and other risks associated with that. And certainly Manitoba is a great place to be.
Well, let me just offer a counter point here. So if I were an investor, I would say, look, I'm buying a junior mining exploration company because I want the risk. I want the upside. I'm not in it for cash flow. Otherwise, I would just buy Barrick or something, right? So why not go to the DRC where there is a high chance you'll find something, hire a security team. Your operating costs might be lower as well.
Well, okay, so there's not necessarily a case that you're going to be more successful at finding that. And again, I'm mitigating risk unassociated with exploration risk. So you're still taking that risk of exploration. You're just not taking the risk that you're going to get taken away by the government that you're there, that you're not going to be able to, once you make the discovery, advance it. Those type of risks is what we're mitigating. So to be in a community like Flin Flon, for example, that's built on mining, you don't have that on the risk of not in my backyard type of scenario. But in terms of the grades, our grades in Manitoba rival the grades in the DRC. The average copper grade in the Congo is between 2 to 3% copper, which is much higher than the global average grade of copper mined, which is less than 0.5%. But if you look at, for example, our Rainbow deposit, which is we just announced a maiden resource on, that deposit's averaging over 3% copper. So you can have a very, very high grade discovery in a tier one jurisdiction like Manitoba. And quite frankly, when I first started exploring Manitoba, I was kind of scratching my head and wondering, why would you go to DRC or these very risky jurisdictions when you have the same upside in a mature mining jurisdiction where there are rule of law? There's people that have the human capital and knowledge base to advance these deposits, mine them. They want the jobs in their community. It's a win-win for everybody.
What's your end goal for your projects? Are you looking for a takeout? Are you looking for a strategic partnership? Are you looking to go into production?
We're advancing this to a production decision. If something happens between now and that point in time, then we'll address that. Obviously, the business is known for the explorers exploring and finding, and the developers and producers needing to replace and replenish that. So if the company were to get taken out between now and when we go into production, that's certainly not out of the gate or out of the question, I should say. But our vision is to discover it and then develop it and take it to a production scenario. And again, being in a tier one jurisdiction also assists in that measure because you're an area where you can advance it through the permitting process because again, there's the permitting regime that's already been put in place for that. You also have the infrastructure, and exploring in proximity to infrastructure is something that if you look at what we're doing in Manitoba, or if you look at any of the assets across the company, is a key thing that we look for when we're picking up different projects or we're looking to go explore. Because oftentimes you go out and a company will take all this risks, like you're saying, they'll make a discovery, but then that discovery is very, very remote. And remote means huge upfront capital costs. And you can have capital costs in the billions of dollars, whereas if you're exploring within proximity to infrastructure where you have access to power, water, people, all of those compress your upfront capex, which reduces your hurdle for your discovery to one day become an economic producing mine.
The capex, is that absorbed by the explorer or some partner down the line that's going to take you out?
Well, that's going to be absorbed by the whether we go and raise the whatever XYZ dollar amount that we need to go into production, or someone in the future does that. If you're a big a mining company, a major, you're naturally going to want to go where you can have the lower upfront capex, have the ability to fast track or move an asset into production quickly to start generating cash flow. Right? There's a lot of very high quality assets in terms of from the value of the in situ metal in the ground from the discoveries that have been made that are very remote. And then the risk appetite for putting up $1 billion+ on your upfront capex to build the mine isn't there as readily as raising the capital, a couple $100 million when you're in a known mining camp where you don't need to relocate the people, you don't need to bring power, water, road access, all the things that you need to facilitate a mine is already in place or in very close proximity when you're really focused to these known jurisdictions. And there's an old adage in exploration that the easiest place to find a mine is in the shadow of a head frame. And there's a lot of truth to that, actually, because our Rainbow deposit, which is one of the, maiden resource we just put out, actually sits about 500 meters away from a historic head frame, which is a part of the infrastructure around a mine.
Do you have an estimate of the mine life of any of these deposits?
So we're not there yet. I mean, that's something that's ahead of us. We've got a very exciting road ahead of us. So you're going to get towards the mine life when you start building a mine plan. Right now, we're in the exploratory phase, and I really like an exploratory phase, or the explorer in mining is like a biotech stock, right? And instead of doing research and development for any kind of trials to get a drug approved, our research and development is done by either geophysical testing that we do to generate targets and then ultimately drilling. And as we have more success and as we grow the resource, that's when you get a revaluation in the company. And we're way ahead of more of the development stuff, which we're talking about, where you get, your production rates, your mine plan, your timelines, and those sort of things.
Well, I know you have a drill result coming out, without spoiling too much for us now. Can you maybe just give us an update on where in the exploration cycle you are currently?
Well, in terms of in the exploration cycle, we're in the early stages. We've announced a maiden resource, and again, it's our first resource on Rainbow and Pine Bay, the two deposits at our Pine Bay project. And we're right now in the midst of an aggressive drilling campaign to follow up and expand those resources. So again, our focus is on resource growth, which is the really most exciting part of the exploration business, I like to think, is that's where you're growing the intrinsic value of that deposit. And then later, once you've really gone through that phase and you've grown the resource as big as the resource is going to get, that's when you enter the development and construction phase. So we're really early in the early innings of something very exciting with just putting our maiden resource and now following up with a very exciting 2023 drilling campaign. And again, as you mentioned, in the whole market's waiting for is results that should be due out in the very near future.
And how are you doing in terms of your resources? Are you looking to raise another round, or do you not need another round for now?
In terms of our treasury or capital,
Yeah.
we did complete a $9.4 million capital raise that was done in March of this year, and that fully funds all the drilling for 2023. So again, we're not actively seeking capital for a financing sense. We obviously love to have new shareholders buy the stock in the open market, or the secondary market, you could call it. But again, in terms of near-term capital to complete the work that needs to be done, that's all fully financed by our supporter shareholder base.
Does the company have any debt?
Zero debt. I don't believe on debt on an exploration company.
Well, why is that? Just out of curiosity.
Well, because you have no way to service the debt. If you're not generating cash flow to service your debt, that can land you in hot water.
I am curious as to why sentiment for investor sentiment for the junior miners and even the larger miners this year seems to be lacking this year. If you take a look at the GDX index, for example, the GDXJ, both have underperformed the S&P 500. Both have even underperformed gold. Why is that? It's typically you would see them move up with equities, but not this year.
Not this year, and that has been an ongoing theme but that also can change on a dime. And ultimately, I think the lack of the move that you see is only producing a bigger move in the future. And I think what's really held back the overall sector, as we started the conversation actually, was on these headlines. You can have a headline one day that there's China slowdown, and that will weaken everything. And then literally 3 days later, you can have a new headline written that's contrary, and then you'll see the market shift. So again, I think as we come out of this concern on being in a recessionary environment and then look at it from a more of a growing economy perspective, you're going to see a renewed interest into the metals space. And the metals complex typically leads out of a recessionary environment anyways, a recessionary cycle.
All right. Well, thank you very much. Max, where can we learn more about Callinex and read about your technical reports? We don't have time to go into, all the reports on your website, but people can read for themselves. Where can we go to access this information?
Yeah, certainly on our website at callinex.ca. They can find out all the recent news and the reports that we put out, for example, in our recent resource report. And if you're interested in becoming a shareholder of the company, you can do so. In the United States, we trade on the ticker CCLXF. And then that's in the OTCQX in the United States. And then we also, our primary listings on the Toronto Venture Exchange here in Canada. And the ticker for that exchange is CNX.
All right. Well, thank you very much. Appreciate your time today. And we'll speak again soon. Appreciate it.
Thanks again for having me. It was really a great time.
Thank you for watching. Don't forget to subscribe and like the video.